From San Antonio, Texas, home of the Alamo, the Riverwalk, and the World Heritage San Antonio Missions, this is the Exit Planning Coach podcast with John F. Dini. Designed to help advisors who work with business owners, John talks with top professionals in the exit planning field about best practices, marketing tips, and how to be more effective when working with owners. Now, here's John F. Dini.
Welcome to the Exit Planning Coach podcast. I'm John F. Dini, and with me today is Brian Trzcinski, the Director of Business Market Development for MassMutual. How you doing today, Brian?
I'm doing great, John. Thanks for having me.
Oh, it's a pleasure. This is our influencers segments where we talk to people that have had quite a bit of influence in the industry and are well known around the exit planning world. But before we get into what you're doing today, Brian, why don't where did you start out?
So, I've been with MassMutual for 18 years, but originally I started off on the insurance side of things. That's where my original background was. And then probably sometime around 2008, 2009, I noticed that there was a big gap in business planning, specifically around insurance planning with business owners. That's kind of where it all began. And I started to corral some resources around the company and start to put together programming around, what could we offer business owners in the business protection space to help them, like funding buy sell agreements, key person insurance, those types of things.
Mm-hmm.
And then as we started to gain more traction and we started to really understand what business owners needed in this space, that's when we really started to get into the area of business evaluation, right? Providing business owners with not credentialed business valuations, as you know, John, but at least giving them a sense of what their largest asset was worth. So we started helping business owners in the arena of valuing the business, knowing that they can't adequately protect something that they don't know what it's worth.
Right.
So we got to that point. And then we quickly realized that, a lot of these business owners are coming up to the point in time where they're going to want to think about who they want to transition their business to. We had a lot of financial professionals that were working with family businesses. So we really started in that arena, partnering with, family business centers and working with the Family Firm Institute and some of those areas that were really focused on family business transition. But then as our offering grew and as our advisors got more and more comfortable working with business owners, we expanded beyond that to start to talk to business owners that maybe want to sell their business or those types of things. And it's really been a 15-year or so progression in building out the programming. But I'm really happy with where MassMutual has come over the years in this space.
Great. And business market development means marketing to business owners. That's my understanding of your job, right?
Yeah. So the way when somebody asks me what I do, I pretty much handle everything that touches a business owner up until the point in time where a financial professional is going to put a plan or a product in place, right? We have advanced sales attorneys that do that kind of stuff, right? But I handle all of the prospecting, I handle all of the fact finding, I handle all of the assessment tools that our advisors use to get in front of business owners, start to figure out where their pain points are, where their risk lives. And John, I think it's important to understand at MassMutual, we bucket risk into 4 areas: personal risk, business risk, employee risk, and future income risk. So everything kind of stems from there. And we really want to help the business owner not just know where the risks are, but also what types of plans and strategies and products they can put in place to de-risk. Because as you know, John, you can't grow a business until you've de-risked it, right? I mean, there's no point in growing something that's got all sorts of, potholes and landmines for the business owner.
Yeah.
And that's really where we want to focus a lot of our energy.
Well, and de-risking is a direct inverse corollary to business value.
Mm-hmm.
The more stable a business is, the lower the beta risk factor, the higher the valuation. Now, when you say business risk, personal and business risk, a lot of times we're talking about funded buy sells.
Mm-hmm.
What is the Connolly decision? Are you guys like geared up to talk to people about the Connolly?
Oh, without a doubt. Yeah. Yep. So, we've encouraged all of our financial professionals to talk to any business owner that has an entity purchase buy-sell agreement. In other words, any buy-sell agreement where the life insurance is owned by the business entity, they are going to be impacted by the Connolly decision. So understanding how that's going to impact the valuation, God forbid somebody passes away and the death benefit gets kicked in to buy out one of the owners. So yeah, no, we have tools and resources available to all of our financial professionals. We've also made stuff available to the business owner public as well. So yeah, no, we're very much focused on that. The other
And
area we're also focused on too, John, is the Secure Act, Secure Act 2.0, which has had a tremendous impact on how business owners will in the future offer retirement plans, qualified plans, to their employees as well. So that's another area that we're focused on as well.
that's outside. We'll come back to the Connolly because I wanted to ask you something about life insurance, but I
Mhm.
don't know the Secure Act 2.0.
Yeah, so back in 2019, Congress passed the original Secure Act.
Mm-hmm.
And really what it did is it put some certain stipulations in around what business owners needed to do to help their employees better plan for retirement. And then at the end of 2022, they enhanced it, Secure Act 2.0, and they put in up to, I believe it's something like 90 provisions in terms of what business owners will be doing going forward. Probably the biggest impact of that is the automatic enrollment provision. So
Ah, okay.
basically, yeah. So basically, going forward, it enables a business owner to automatically enroll their employees into a qualified plan if they don't offer one. There's also other things around changing required minimum distribution guidelines. There's also some tax benefits, which I can't talk about because I'm not a tax attorney. But there's all sorts of benefits and things that business owners need to know about in terms of how they're going to offer, retirement plans going forward.
Now that the automatic enrollment is still optional for the business owner, right?
It's optional for the employee.
No, the employee
So the
can opt
employee
out,
can opt out.
but does the business owner have to do automatic enrollment now?
My understanding is yes.
Okay. Okay. Yeah, I know you can't talk about certain things. I've been through MassMutual compliance, so I know.
You sure have. Probably more so than you want it to be.
Yeah. Although to be fair, anytime we get involved with compliance, it's more than I want to be. Who do you use for valuation?
So we use a tool called Value Compass,
Oh,
uh,
okay. I know Value
formerly known as
Compass.
Core Value. For
Sure.
some of you may recognize as that. So yeah, so we've used them since 2018. As sort of but again, I can't stress it enough. These aren't qualified valuations. These are
Right.
valuations
Right.
done for business planning purposes. But we found it to be a very good valuation. We like it because it focuses not so much on the financials of the business, but on the operational side of the business.
Mm-hmm.
And then the other thing it allows us to do is not just give the business owner their current value, but also give them their potential value if their business were operating
Right.
relative peak to their peers. So that's an important thing for our advisors to know, because retirement planning, as you can imagine, is big in our space. So helping business owners really understand, can this business afford their retirement? In some cases, it can if the business is able to grow, but in a lot of cases, it can't. And a tool like that helps business owners understand that.
Sure. Sure. We look at the gap. Well, actually, terminology in this business gets funny because a lot of people refer to the value gap as the difference between what your company is worth and what it could be. In our planning process, the value gap is between what you would realize if you left today and what you want, which
Hmm.
is the slightly different way of looking at it. It's more owner centric, you
We
know.
call that the wealth gap.
Okay.
Yep. It's funny too, John, because so EPI, I don't know if you've had them on the podcast or in the future.
Not
They
yet.
have the
Yeah, there.
terminology called the triggering event,
Mm-hmm.
which basically is about points in time where you do plan, where you need to have in our world, a triggering event is a death, a disability, or a divorce. So,
Oh, sure. It triggers the policy. Yeah.
yeah, so much
Yeah.
different meaning.
Yeah. Yeah. I'm sure the first time you went to EPI and Chris started talking about the triggering event, you were like, what?
I was like, who died?
No. Yeah. So how did you get to Mass Mutual?
So I've always been in the financial services space. Prior to MassMutual, I was at New England Financial for a while up in Boston. And a couple of my colleagues actually came over here. Again, at the time, I was working on the life insurance side of things, and I was recruited over here by some of my colleagues that I had worked with at those at that company. Not coming in thinking this was going to be where I would end up. Um, but certainly glad I did. I really enjoy supporting the business owner market over here. It's been great.
Well, it's rewarding.
Yeah.
There's positive and negative, not negative in what we do. I'm a practitioner, so I'm doing hands-on planning with owners, and of course, it's rewarding when they come back to you, and as I'm sure they do with you too, and say, there's a sense of relief, there's a sense of security. My family's so happy that I did this, and
Hmm.
and that we're in the right situation. But also on the negative side, you get more motivated when you hear the disaster stories of people that
Hmm.
didn't plan,
Yep.
and it's like I need to talk to every business owner,
Yeah.
and it's not even for financial reasons. They just need to know.
I bet you if I took a poll, John, of all of our financial professionals across the country, I would guess 95% of them would tell you they want to work with business owners.
Hmm.
Um, but the reality is, a lot of them, and I think what's so rewarding about what I do is they all want to do that and they all want to get there, but a lot of them just don't have the confidence or they don't have the experience or there's something in their head that makes them think that they can't talk to business owners, and in my job, my ability to be able to help these folks get comfortable and get the baseline knowledge and get the expertise and help them get into that market and do all the things that you just talked about for the business owner, is tremendously rewarding because listen, business owners, they put their pants on one leg at a time, just like the rest of us do,
Sure, sure.
and if you can get them talking about their business, you can get them talking about anything. And I think at least in our industry, in our discipline, I think a lot of our folks just kind of have to get past the head trash of saying, well, what if they ask me something I don't know the answer to? So what? Who
Yeah,
cares?
yeah. No,
Tell them you're going to go get the answer, and then come
right,
back.
right. Um, Tell you what, I'm going to continue on that, but I'm going to take a quick break,
Mhm.
so that we can pay for the podcast, and then we're going to come back. So everybody stick around. We'll be back in 60 seconds.
How would your practice survive if only 25% of your clients were happy with your work? How many referrals would you get? Would you advertise that success rate? Over the last decade, both the Exit Planning Institute and PwC have surveyed owners and found that 75% were profoundly unhappy a year after their exits. In 10 years, the exit planning industry has done little to fix this issue. Business owners need purpose, direction, and activity after exiting. Planning for that starts with your very first coaching conversation. We work with advisors who believe that clients should be happy after exiting. Exit Map is a structured discovery process that helps you have deeper conversations about client options, objectives, and life after the business. We help you launch better transitions. Take a test drive at exitmap.com.
Welcome back to the Exit Planning Coach podcast. My guest today is Brian Trzcinski, the Director of Business Market Development. We're talking about de-risking a company. For business owners, seldom realize it's their most illiquid asset. And we're talking about some of the disaster stories that we hear of people that didn't plan and the gratification of having somebody realize what a plan is all about. So you started in the financial planning and the life insurance side and then went over. How did you get involved with the exit planning organizations?
Okay, that's an interesting story. So, when I got here, or when I kind of started working in the business owner space, we had a credential, I guess an advanced learning designation, if you will, called the Certified Family Business Specialist. And it was offered through the American College. And anybody who's familiar with the financial services industry knows that the American College is like the preeminent education body, like the CHFC, the CLU, all the alphabet soup that you see people in my industry have, they get
Hmm.
that from the American College. So around 2017 or 2018, the decision was, and we used to fund that. So MassMutual used to pay for our advisors to get that. And then the decision was made that we didn't want to do that, and we wanted to explore other alternatives to credentials beyond the American college. So I ended up going through, obviously we had some experience with BEI and the CEXP designation. I worked with John Leonetti in his designation, the CBEC. And then, of course, there was the EPI one. So I audited all of these different certifications. And me personally, John, I don't know how you feel about it. Everybody's got their opinion. I just thought that the Exit Planning Institute, the CEPA designation, was the strongest for our folks because it gave them a process to follow in working with business owners.
Right. Right.
And I always say to my folks, and I talk to them, even though exit planning is in the name, and it is by and large, the end game is the exit. There's so much more to it than just exit planning.
True.
It teaches you how to ask the right questions. It teaches you how to have conversations around things like valuation and transition planning and planning for the unknown. And it teaches you how to do it in systematic bite-sized chunks, which is so important for business owners. So once we kind of got in with the Exit Planning Institute and realized that that was going to be our designation of choice, well, obviously, organically, we started to gravitate towards doing more of that type of planning.
Mm-hmm. Yeah, I think last I heard anyway, I was the only one, at least I'm the first one in the country to hold all three. Somebody may have caught up by now. I can't believe there are people as OCD as I am, but and it's true. I mean, all three programs are good, but the CEXP and BEI is always concentrated on the transaction event, the legal and tax implications of making the transfer. The CBEC over at IEPA has always been much more about the capital markets, about making a market for the business and presenting it in the right tranche. I agree with you that EPI is more the soup to nuts of start here if you want to wind up here, and these are the steps along the way. So I can see why you chose that. And a lot of your people have been through it now.
Oh yeah, we've got a couple hundred. Yep.
Yeah.
And growing. Yep. And the nice thing about it too, John, that I've personally been really pleased with is our financial planning team have adopted it as well as sort of if you want to be doing fee-based planning, which you should be doing with business owners, you should not be working transactionally with business owners. You should be
Absolutely.
doing holistic planning. They've adopted both Value Compass on the valuation side and the CEPA on the designation side, the training side. So it's really kind of becoming baked into what MassMutual does in the market with business owners.
Yeah, and that's great. I mean, that the two pieces, top and bottom, in their first gate of EPI is the company valuation, and then the three legs of the stool, which is the exit maps world is the three legs part. I can't tell you how many times I've been to an FBA meeting. I probably could. It's two or three, but and you say, how many people work with business owners? All the hands go up. How many people have business owners that have more than 50% of their net worth in the company? All the hands go up. How many people have ever justified or confirmed that the number the business owner told you his company was worth was real? All the hands go down. And it's like, how can you do that?
Mm-hmm.
How can you be doing financial planning with 50 or 60 or 70% of your assumptions are based on what the owner heard at a trade show,
Yeah.
about
And then you're
company
going to
values.
fund agreements with those numbers, right? You're going
Right,
to,
right.
right. So God forbid, one of the owners passes away and, they're ready to buy out the spouse, the surviving family, or whoever it may be. And they show up with a check that's grossly undervalued than what the actual business is worth.
Yeah,
And a lot of it too, John, is a lot of the times it's because nobody ever revisits these buy sell agreements, these funding
yeah,
mechanisms were put in place 30 years ago.
yeah, yeah. We see that a lot. Well,
Mm-hmm.
and let's swing back to the Connolly now. What is the general recommendation for somebody that's holding a major policy in a company to avoid the Connolly problem? I don't know. Insurance is probably my weakest area in planning. Can they convert it? Can they change those policies to
Well,
something else?
yeah, well, we don't recommend. I mean, the most important thing is to have the agreement funded.
Hmm.
Okay, so you don't want something like the Connolly decision. The Connolly decision is not an impetus to not fund your agreement anymore.
Okay,
Right?
right.
So you want to keep the funding in place, right? You just want to be aware that it's going to have an impact on how the business is going to be valued for tax purposes in the event of a death. Now, what it could do is it could, when you're doing planning, it may decide, you know what, instead of doing an entity purchase agreement arrangement, we're going to do a cross purchase arrangement. So instead of the
Sure.
the bit, right? So but that becomes problematic when you have 5 owners because you don't want to have to buy 25 life insurance policies,
Yeah,
right? So, right. So it's just, and again, I'm not an attorney. Obviously, if you are impacted by this or you have a client that's impacted by this, by all means talk to your tax attorney.
sure.
Don't go by what I'm saying. But what I will say in terms of that, John, is it should not impact your funding. Funding the agreement is still most important. And it's just another reason to have a conversation with a trusted advisor to say, is this the right structure tax wise and, protection wise, or should we go to a cross purchase or whatever? But just being aware so that there's no surprises, should a triggering event occur,
Yeah. One of
um,
your triggering
if
events,
one of
right?
our triggering events occur, is really the most important thing.
Can you convert insurance policies? If
Well,
you have cash values built up in insurance policies, can you transfer them to another kind of policy? I have no idea. I'm really clueless. I'm
Well,
asking.
you could do what's called the replacement. It wouldn't. So the only thing you can technically convert is term insurance to permanent insurance.
Okay.
If you're going to change from a one type of permanent policy to another type, that's called the replacement.
But you can get some sort of credit, right? You don't just throw that old policy away and say, "Oh well."
It depends. That's a
Okay.
whole other podcast.
Okay. 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 We'll leave that alone. As you can tell, I'm out of my depth on that one. You know, it's my answer is like, go talk to a MassMutual guy. You know, uh, we have a very good one here. You know her, Melinda Adams. Uh,
Yes. Yeah, Melinda's
as
great.
a matter of fact, I'm meeting with her next week. So where do you go from here? What's your path?
Career path
Yeah,
or
personally, Brian Trzcinski, where did you,
well, I'm 48, so I mean retirement's still a little ways away.
I hope so,
Um,
yeah.
yeah, so I intend to stay at MassMutual for as long as they'll have me. I've been here long enough. Like I said earlier, the traction that we're gaining with the programming that we have in the business owner space is really energizing, and seeing other parts of the country and other parts of the company want to get on board with what we're doing is great. So I don't see myself going anywhere different. I mean, John, at some point in time, maybe I would probably like to do maybe what you're doing in terms of being more of a practitioner in the future.
Hmm.
Maybe do some consulting at some point, when I start to get more towards the end of my corporate career. But in terms of where I'm at right now, I mean, I'm just really enjoying what I'm doing now and continuing to build out MassMutual's offering.
No, I wasn't trying to get you another career or anything. I was just asking. Yeah. Yeah. So some days, it's very rewarding to do what I do. Other days you have to be crazy to do what I do.
Yeah.
Um,
It's different, right? Because what I do now is more advisor focused, right?
mhm.
Versus more, and don't get me wrong, I am consumer facing at times. I do a lot of seminars for business owners and that sort of thing, but it's a little bit different, consulting for the advisors versus consulting for the business owner. But they're both very rewarding in their own right.
Yeah.
Just they're very different.
It is different. Our director of business development, Hannah Chalker, whom you know well, she corrects me because we deal in Exit Map, we deal with advisors, and
Hmm.
we're talking about advisors. And she said, you know, you've got to stop being a practitioner when you talk to the advisors. Because I talk to the advisors about tools or approaches or problems, and I keep talking about the benefit to the owner, and I'm not talking about the benefit to the advisor because so much of my time is spent with the owners. and I'm focused on the end game, what the advisor's client would get out of it. But if she tells me I've got to pay more attention to what the advisor gets out of it. It's like,
And
oh
they're
yeah,
all different, they all have
yeah,
their own sales processes and they all have their different approaches. But it's good because I learn something too every time I talk to the advisors about what they're doing and what's working. And
sure.
if I can be a conduit to sharing best practices across the advisor community, I would view that that's a big part of my job as well.
All right. Well, I appreciate your time. Is there anything that the advisors who watch this podcast, and there's a few of them, uh, should know? Can they get in touch with you if they see
Yeah,
MassMutual
John,
soon?
I was just going to give a shameless plug if you didn't mind.
Oh, shameless plug. That's what we're here for.
Yeah, no, if anybody, has business owner clients or prospects that, could get help in any of these arenas and a MassMutual advisor could be a person to help, by all means get in touch with me. I have inroads with people all across the country. I can facilitate introductions and provide any resources or or any help with actual people on the street, whatever you need, by all means feel free to reach out.
Great. And how do they find you? Let's get a phone number and email.
Sure. My email is B, first initial of my name, Brian B, and then my last name is spelled TRZCINSKI. I'm sure you'll probably put that somewhere in the podcast.
Yes, we will.
At at
If you're in the
MassMutual.
car jotting this down, stop. It'll be there.
Yep. So B Trzcinski at MassMutual.com is the best way to get in touch with me. And then if we need to set up a phone call or a Zoom, happy to do that as well.
Okay, great.
Yeah, and John, if Exit Map wants any literature on the Connolly case that you guys want to post or share, let me know. I'm happy to, send that over to you, and you guys can post it on your channels as well.
Oh, would love it. Would love it. Obviously a hot topic right now, although we'll see. Maybe the whole thing will go out the window.
It's
I
another
hear,
reason to have a
yeah.
conversation. That's
Well,
the
I'm
main
just,
thing.
I mean, I don't know when we'll put this out. I suspect it'll be sometime around Inauguration Day, but if Donald Trump, I hear he's going to trim back the government. If he wants to get rid of the IRS, I guess, people, that would be okay too.
Yeah, for some, yeah, I'm not. Yeah, we can hope.
All right. Great talking to you, Brian. Thanks for coming on. I really
My pleasure.
appreciate it. Brian Trzcinski from MassMutual, and he gave you the information to contact him, and he can put you in contact with one of the great MassMutual agents around the country.
Thanks,
Take
John.
care, Brian. Talk to you soon.
You too. Bye.
Bye-bye.